Check, 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 check. What is going on, everyone? Welcome back to another 3 at 3. We managed to do the impossible. We are not going to only talk about Facebook's Libra today, although we are going to talk about it a bit. So let's dive right in because we got a bunch of good things to chat about. So first off, obviously, yesterday was the big Libra day. It was all Libra all the time, and everything that everyone wanted to talk about was this new Facebook cryptocurrency. Turns out that everyone includes regulators from around the world. So almost immediately you saw Libra backlash from France and from Germany and from a number of different places. And then throughout the day, the U.S. started to trickle in. And notably, Maxine Waters called for Facebook to actually halt digital currency plans, to halt their plans basically until the U.S. government could get involved. Now, it's interesting, I think, in the context of what has become the kind of clear day two narrative, which is a skepticism around whether the project's actually going to ever launch, whether this regulatory scrutiny is going to be too much. So you had Joe from Bloomberg, who is wondering kind of publicly thinking out loud about this, and basically making the argument that it is so sort of ill-timed in terms of what the general opinion about Facebook is, that it's highly likely to just not go through. You had Ari Paul, who said something similar. He said it's 50-50 to ever launch. And I think that has to do with just the sheer number of different regulatory bodies that it's going to have to interact with, right? You've got Dudas from the block, who kind of joined in and agrees, who said that in his kind of background conversations, he was hearing a similar sentiment. And then you had Hasu, who was noting that there are a number of different decisions, including the decision to not have the cryptocurrency be backed by or not be pegged to the value of the dollar as a serious hurdle. And so, it's interesting when so many people kind of jump in. It's always interesting to see in general what the day two story is around any big news. And the fact that so many people have this kind of skepticism is interesting. So that's something that we're obviously going to watch. You got to think that a project of this magnitude and with Facebook's backing had to have considered this, had to have had conversations that convinced them that the market was open to them doing this now. But then again, who knows? Maybe not. Maybe it's just going to be kind of regulated out of existence. So we will see. All right. On to the next topic. So this is a fun one. I woke up this morning to a news story on CoinDesk about Dovi's Hardcore Fund. So this is a fund specifically aimed at financing basically Bitcoin developers to code on Bitcoin full time. And the announcement was that they had kind of collected 50 BTC in China, which is the equivalent right now of about $450,000 for this explicit purpose. And I think this is something that's a really important ongoing issue in Bitcoin and in every cryptocurrency, which is what are the right ways to incentivize open source software development. And it goes back to open source even before crypto as well, right? Fuck, I do this all the time with the stupid countdown. All right. We'll only do this one for about a minute more. Where in the absence of a clear financial motive, there's not a clear answer to who's supposed to fund the existing infrastructure or the sort of shared infrastructure. And to some extent, you kind of just rely on companies to voluntarily contribute to it. And I think that it's what I would like to see, and what I hope we're starting to see, is a shift in which there is a broader kind of sense of accountability to both crypto, or from both crypto funds and crypto adjacent companies building on Bitcoin, companies building in the Ethereum ecosystem, to have some amount of commitment to funding the actual salaries and needs and lives of of developers, as well as key infrastructure. I think that the risk that you run if you don't have this sort of normalized is that people are inherently going to go to where there is financial opportunity. And you're often going to see that be things like ICOs or IEOs or whatever it is, right? So to the extent that we want to keep people investing in the ecosystems that exist and contributing there rather than kind of further balkanizing the industry, financial commitment to actual developers to spend real time on this is really important. Luckily, I think there's a lot of good stuff on that front that's happening, right? So you've got the Hardcore Fund, which we saw just announced today. You have Square Crypto, which is kind of this public commitment from Jack and the team at Square to fund operators, developers, and even marketers to focus on Bitcoin with no real Square business imperative behind that. They just announced their first hire, who's Moneyball on crypto or on Twitter, aka Steve Lee, which a lot of people were really excited for. You have obviously the Moloch DAO in the Ethereum community that has that was trolling Dovey a little bit, but also has recently had a significant increase in commitment to funding shared Ethereum infrastructure. So I think it's looking positive, and I'm excited to see this continue to develop. And with that, let's go to one more, which is also about money, but a kind of different order of magnitude. All right. So Algorand is for sure the big project news of the day, right? So this project has been buzzing for a while. It has a really interesting pedigree in the team, and the conversation for a few weeks, though, has been largely around their different approach to a sale, to a token sale. So they did a sort of a reverse auction. Let's go actually into a piece that Arrington Capital wrote about it. So they called it a monetary experiment. So effectively, they did a Dutch auction that allowed for price discovery. So it started at $10, and basically people, investors all outside the U.S.